Madden. David, many thanks for being with us today. So first of all, we've touched on this point already when we talked about the US here. I mean, are rate hikes really going to help with this consumer inflation situation, given that the inflation is also driven by very, very high oil prices and also Chinese slowdown?
I don't think the interest rate hikes by central banks, be it in Korea, in South Korea, or be it here in the UK or the US, is really going to do a huge amount, because, as you mentioned, this has got much more to do with ramifications from the lockdown in Shanghai, the knock-on impact of say, transportation and logistics costs still ringing through from the pandemic, and also, as you mentioned, the extremely high levels of energy, be it oil and gas, and they're at very much elevated levels. And with that, that's a major contributor to inflation levels. So, to a certain extent, the actions of various different central banks, be it in Korea or be it in the US, will probably chip away at demand eventually. But for the time being, I think this is more of a squeezed supply side issue, particularly with energy. And that seems to me to be the biggest contributing factor to high levels of inflation. So as much as central bankers want to try and tame inflation, to a certain extent, they're sort of powerless to do so.
Interesting, David, and just quickly on the won, we've seen the Korean won strengthening today, but really, what do you expect will happen in the medium term, especially as a reaction to Fed tightening, potentially to a stronger dollar? What impact is a stronger dollar going to have on Asian currencies?
Well, as you mentioned, it wasn't that long ago the won was at a 10-year low. So it seems to me that the central bank in South Korea is keen to hike interest rates to, in a way, sort of ever loosely stay in lockstep with the actions of the Bank of England here in the UK and the Federal Reserve in the United States. Because if your currency is excessively weak for a prolonged period of time, that means you have a lot of imported inflation. So if the domestic currency in Korea, the won, essentially remains so weak against the US dollar for a prolonged period of time, if they're importing commodities, oil and gas, which are traded in dollars, you're getting that level of extra inflation, not just from the high levels of energy, but also from the high levels, from the expensive levels of US dollars that's needed to purchase that. So I think this is about putting a floor under the won as a way of actually ensuring it's capping its inflation issues.
David Madden, many thanks for this interesting update this morning.
Thank you.